by the Board of Trustees of the Village of Patchogue to review and approve the proposed budget for the Village of Patchogue for fiscal year 2014-2015. A copy of the proposed budget is on file at the office of the village clerk. At said public hearing, any person interested will be given the opportunity to be heard.
Thank you very much. This year's tax rate is going to go up by 2.86%. On the average household, it's about $4 a month, or $46.37 per year. On the average, take the highs and lows and come out with a number in the middle. It's about $4 a month. Some will be 6, some will be 3. So you know, we use $600,000 from our surplus for tax relief. And we're also, prior to the 5/31/14, which is the last day of the fiscal year, we have 3 certiorari, which are actually tax grievances against the village by commercial properties. We're taking an additional $344,000 out to settle those certiorari suits. They are, actually they're negotiated. I think they're negotiated down from probably close to down almost better than in half. So between those two, the $600,000 is in this out of surplus for tax relief. There's also an addition $344,000 coming out of surplus, so close to $1 million is coming out of surplus to keep our tax rate. We can keep it, like I said, it's at 2.86%. There are a number of cost drivers. I'm going to ask Village Treasurer Mr. Krosik to please go through those.
Okay. Basically, our tax rate is at 13.27 this year versus 12.90 last year. We have worked very hard to keep all the expenses that we can control under control, and we did. Tom Ferg is going to talk to you a little bit later about what we did in that respect, but we have certain expenses that we really can't control. Retirement expenses are up 6%. Workman's comp is up 24%. Health insurance is up 34%. We're talking about $190,000 in expenses that we have no control over. Other than that, we have been working very hard to keep the expenses down. We had some, unfortunate items like minimum wage went from $7.25 to $8. There's certain things that we have no control over. If we didn't have that $190,000, we'd be well below that 287. We'd be about 1% over a tax rate from last year. But unfortunately, we put in some expenses, some code people that we needed to get in because of our parking meters. But the parking meters are going to cover those costs. So everything that we can control, we basically have. Other items we just can't.
One of the things you have to, when you take a look at this budget, when you take a look at any budget of any municipality, in 2003-04 we paid $57,000 in pension and retirement costs. This year it's $725,000. So over the last 10 years we've had to figure out how to manage those exorbitant increases. Workman's compensation, as Mr. Korsick indicated, went up 24%, went up $86,000 this year. Health insurance only went up 3%, but it was $40,000. And this is the first year we've actually we were able to get the last contract, a minimal amount, but beginning to get employee contributions into for the health insurance, where it had never been done before. So there are a whole series of cost drivers that, as Mr. Korsick indicated, we don't have any control over. It just, but when you go from $57,000 to $725,000, you have to be able to figure out how to make those numbers work so we can continue to do things. One of the things that when you read all of these things about tax caps and all these other things that people like to do, they forget the single most important thing for any economic development or anything that will eventually stabilize taxes is infrastructure. That if you allow your infrastructure to deteriorate quickly to a point, now instead of paving a road, you have to replace the road. Like, one of the problems that we had is over on, when we did Academy Street, Cleveland Street, those two streets themselves had to be totally reconstructed. They were failing. So we have other streets in the village over the years that have failed. So you go from just paving them to reconstructing. You go from a $60 to $70,000 job, like Academy Street would have been, to $180,000, almost $200,000. So part of what we look to do is to continue to take care of our infrastructure. If you go down by the parks now, you'll see the sidewalks being put in alongside the parks. Safety issues. Take a look at South Ocean Avenue. That's good. We're gonna have to put together a bond to do South Ocean Avenue. And of course, it's the better part of $250,000. If we don't do it now, it will cost us much greater in the future. Trustee Byrd has spent a lot of time looking through the budget. And he looked at the same thing that Mr. Crosby did, except on the other side, on our expense side.